What a hedge fund's implosion says about the AI trade. Andrew Ross Sorkin here with the latest from the New York Times newsletter. We told you on Thursday to watch for fallout from situational awareness, the high-flying hedge fund that bet heavily and with enormous leverage on the artificial intelligence boom. Well, after a wave of margin calls, the fund was forced into a fire sale on Thursday, offloading its public stock portfolio to Ken Griffin's Citadel. It's a playbook Griffin has executed repeatedly during market distress. Remember Melvin Capital and the GameStop frenzy in 2021? The sheer speed of the implosion has Wall Street searching for parallels. Some have compared the situational awareness woes to the market ructions in 1998 that led to the collapse of long-term capital management, or to the failure of Archegos Capital Management. I reached out to Roger Lowenstein, author of When Genius Failed, to ask about the LTCM comparison. He said it depends on the extent of their debt and the extent to which other firms copycat their investments. LTCM had a ton of debt, and its values tanked as imitative firms sensed their duress and bailed out ahead of it or with it. To him it feels a little more like the dot-com's huge equity investments in a new thing that no one can value with any hope of precision. The volatile artificial intelligence trade has burned plenty of investors. Few are bigger than situational awareness, a buzzy hedge fund started 2 years ago by Leopold Aschenbrenner, a former OpenAI researcher with no previous investment experience. The fallout on Friday seems to be contained. The fund is still operating, but its rapid fall, its portfolio of mostly AI bets fell roughly 67% this month, according to the Wall Street Journal, has rattled the investment community. "We let you down this month," the fund wrote in a letter to clients, according to the Journal. On Thursday, situational awareness sold off a chunk of its holdings at a discount to Citadel to shore up funding and cover its margin calls amid a wider sell-off in AI and chip stocks. All told, the fund sought to raise more than $10 billion, Rob Copeland of The Times reported. The firm also made emergency calls to Sequoia and Greenoaks to see if they would buy its stakes in private companies, according to Bloomberg. Those talks ended, however, after situational awareness cinched the Citadel transaction. A juicy tidbit, the fund had weighed selling its $3.5 billion stake in Anthropic, the AI lab expected to go public later this year, to those firms before the deal with Citadel closed. That's the latest on the situational awareness implosion and what it says about the AI trade. Thanks for listening, and we'll be back with more updates soon.